Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Wednesday morning and a good one at that, given the fact that global cues are fairly positive. GIFT Nifty hinting at a fresh start for the Indian market and lots of stocks to watch out for. A couple of block deals expected today. You have the likes of Embassy REITs as well as NAM India to watch out for. We'll be talking about these stocks. We'll also be taking stock of all your stock related queries, or if you have any, send them in to us on our YouTube feed and we'll try and take them up during the course of the show. But of course, before we move any further, let's take a look at the top stories at this hour. Santa rally continues on Wall Street as the Dow notches 9th straight day of gains. The S&P 500 too nears a record high. Asian markets open higher with the Nikkei extending its gain after Bank of Japan strikes a dovish note. The GIFT Nifty, as I mentioned, suggesting a gap up start for the Indian market above that 21,600 mark. Oil prices hover around the $80 a barrel mark as tankers shun the Red Sea on the back of heightened attacks by Houthi militants. Meanwhile, gold remains firm above the $2,000 mark on the back of a soft US dollar and lower US Treasury yields. RBI tightens rules for banks and NBFCs investing in alternate investment funds. Says they have to liquidate their investment within 30 days if the fund has invested in an existing borrower. The move is aimed at preventing lenders from utilizing the alternative investment fund route to evergreening their loans. Among stocks to watch out for, Varun Beverages set to acquire the beverage company in South Africa for over 1,300 crore rupees. Hopes to complete the deal by July 2024 and big block deals likely today. IndusInd Bank will look to sell 2.86% equity in Nippon AMC and Blackstone will exit its 23.5% stake in Embassy REITs. And stationery major DOMS and affordable home financier India Shelter Finance are all set to make their debuts on the Lal Street today. The 740 crore rupee issue of aerospace component and turbine manufacturer Azad Engineering, which is also backed by Sachin Tendulkar, will open for subscription later today. Well, without any delay, let me bring on board my first guest for today. Joining me is Hemen Kapadia, who's the Senior VP Institutional Equity at Choksey Securities. Great to have you on the show, Hemen, as always. 21,600, that's what the GIFT Nifty is indicating. And yesterday, around 2:30, we saw a good spurt in the market come in and we clocked that 21,500 mark for the first time ever. What is the setup looking like today? And, an extension to that, would you expect 22,000 to be hit this year itself?
A very good morning to you, Nandita. Thank you for having me on the show. It's such a pleasure. 22,000, I think it's possible. Will it sustain? I have my doubts. 21,500 was one possible technical level if you use forecasting techniques. We've come there. We've reached that point. The next couple of levels are 21,800 and 22,200. Everything is hunky-dory, but we moved too fast, Nandita. Maybe I've said the same thing earlier, but I don't know how long we can defy the laws of gravity. So if 22 comes, 22 is coming, Nandita. If it doesn't come now, it comes in probably in the early next year. So, but will it sustain if it comes now? I don't think so. We're overbought. We need a correction to make the market healthy and sort of make it like a stepping stone for the next move. So, which we would correct, and if 22,000 comes now, I'd say it's a slight high probability that yes, we could finally give a much needed overdue correction.
All right, and Hemen, what would you be watching out for on the Nifty Bank Index? PSU Banks have had a good run. Yesterday we had a good bullish report coming in from Motilal Oswal on some of the PSU banking names, and SBI has also started participating now. So from the PSU banking lot, how are some of the stocks looking? And Bank of Baroda in particular, we have a query coming in from Siddharth Jain on this particular counter. So what would you advise investors to do with respect to PSU banks?
Frankly speaking, after almost a decade or more of doing nothing, all thanks to the government cleaning up the balance sheets of these PSU banks, I think they have all done phenomenally well. State Bank, like you mentioned, has been a slight laggard because if you see Can Bank and you mentioned Bank of Baroda, they've been sort of leading the charge. On the other side, you can look at a J&K Bank, you can look at a Union Bank, you can look at a Bank of India, all of them are at multi-year highs. So they are, sort of doing well, and I believe would do well. Coming back to Bank of Baroda, setup still seems positive. We are safely ensconced in a longer term uptrend. In fact, we are an uptrend on any time in Nandita, short term, medium term, long term. But I wouldn't say but 228.90 was the all time high posted in February, March 2015, Nandita. And we are at 228.50. So if we are walking into an all time multi year high after such a brilliant run up, I would say we might see resistance and quite a lot of it. So, notwithstanding that, the setup still seems promising. State Bank, like I mentioned, has been a late bloomer. We were not doing anything for quite some time. I believe we spent almost a year between 500 and 622 when the entire I say most of the PSU banks, including the Nifty PSU index, PSU bank index, were running helter skelter. 622, 500, 1 year of a consolidation. Now we've broken out by closing about 622 and posted all time high. I believe we should be going comfortably past 700 as far as State Bank is concerned, Nandita.
All right, expect levels of above 700 on SBI. Hold that thought, Hemen. We'll be coming back and talking about more stocks, and we'll be also taking up more queries that are trickling in this morning. But staying with the banking space and financial space rather, RBI has tightened rules for banks and NBFCs investing in alternate investment funds. The central bank has said that they have to liquidate their investment within 30 days if the fund has invested in an existing borrower. Now, what does this move mean for lenders and AIFs? To discuss that, we are joined by Kunal Valia, who's the founder of StatLane. Great to have you on the show, Kunal. First of all, RBI has once again struck on banks and NBFCs, and this time it has cracked the whip on lenders investing in alternate investment funds linked to borrowing companies. What was the RBI really worried about here, and what will be the implications of this move?
Good morning, Nandita. Thanks for having me. The issue is very clear that RBI does not want to repeat a typical scenario which was there between 2008 and 2013-14, where some of the stressed lenders used to get loan from some of the other banks, and it used to be evergreening of loans. Similar scenario in one way or not was playing out in certain AIFs, particularly the credit funds, which used to basically used by stressed borrowers to take some investments in addition to the loans or investments which was already done by, let's say, a bank or an NBFC or a housing finance company. So this was typically a very simple cycle of evergreening of loans which was taking place in a way. And RBI has been discussing this issue with the alternate investments funds for quite some time. And after having those discussions, finally they have laid down this regulation in place to avoid any kind of a mishap.
Right. So the entire lending system is at risk of an increase in NPAs. Is that what you're saying?
Yes, it puts the lending system in one way or the other into an issue, because the stressed borrowers who have not been able to pay the loans back now approaches an AIF, does some kind of a transaction, certain structured transaction, wherein they again get some kind of an investment from that AIF and try to use that money to pay back the bank in some way or the other in order to be classified as an NPA. In order to avoid this kind of a thing recurringly, I think this is a very wise move by RBI in order to regulate not just the stressed borrowers, but also protecting the interest of the investors in those AIF.
Now, if these positions are not liquidated within 30 days, the bank or NBFC will have to make 100% provision. That's what the RBI has mandated. After the RBI's crackdown on personal loans, will this move further increase capital requirement, and will this impact capital to risk-weighted assets ratio? And B, post the latest move, are NBFCs a complete avoid at the current juncture?
Right. So I'll break the questions into two parts, one relating to banks and other relating to NBFC. On the banking side, I don't think the size of the transactions are that big enough that it will lead to an increased amount of risk capital which banks cannot provide for. That's number one. Number two is that there will be some kind of a liquidity which will be made available to certain banks by the AIFs, because this is not an issue which is new to the market players. This has been discussed, well thought about it over the last several months by RBI, and thereafter this step has been taken. So in certain cases, there will be liquidity. In certain cases, there will be provisions. Coming back to NBFCs, I don't think this was going to be a large scale recurring issue for NBFCs as well. However, yes, there is a little bit of stress point at this point in time. I think the issue should be able to subside in next few months relating to this evergreening of loans through misuse of AIFs.
Right, but what about AIFs? Do you think those will go out of favor post this move? Because SEBI is already looking into AIFs, as you already mentioned.
Not really. The size of industry is quite large, and this transactions. I read one of the reports which stated that around 15,000 crore to 25,000 crore of uh, uh, assets are being looked upon by RBI, where AIFs have been used to circumvent the stressed part of the business by certain borrowers. So I don't think the size is large enough, and I think it's a step taken in the right direction and at the right time, so that to avoid a larger ballooning of this issue.
All right, that's the view then. The size of the AIF industry is such that it will not have such a large impact on this industry. Thanks a lot, Kunal, with that, for taking out time and joining in and putting things into perspective for us. It was a pleasure chatting with you this morning.
Thank you, Nandita.
Right. Well, with that, let's go back to Hemen and talk about the stock of the day. Embassy, REIT. There will be a block deal in the counter. Blackstone, according to sources, is planning an exit from this particular company. 23.5% stake sale likely at a floor price of 310 rupees per share. Given the fact that it's such a large giant exiting this particular company, I mean, the stock is likely to come under pressure in today's session. The stock has seen a good upward move, if you look at the 5-day chart and 1-month chart at least. Going forward, what kind of level, at least on the downside, would you look out for today's session?
I don't know, like you mentioned, Nandita, the knee-jerk reaction is not actually going to be a very pleasant thing. So I believe something around 290 is where there is support coming in. But for all you know, after that knee-jerk reaction, we see some stability coming in. I'd say just wait for a day or two for the hubris to settle down. Things might not get so bad, but I just step back a bit and wait and see where we finally see stability coming in. I wouldn't be too unduly worried, but yes, sentiment-wise, it will definitely take a hit.
Right, that's the view. Knee-jerk reaction expected. But let's talk about Varun Beverages as well. It has made a South African acquisition worth 1320 crore rupees. In fact, it will be acquiring South Africa's beverage company, which owns PepsiCo beverage rights in South Africa. CLSA has upgraded the stock to buy, post this particular acquisition news, and target price has been raised from 1419, to 1419 from 1070 rupees per share. But looking at this particular chart, Varun Beverages, would you have any thoughts if one should invest?
It's safely ensconced in a longer term uptrend, Nandita. 5 years and counting. It's been in a dream run in the sense there have been 1, 2, 3. There have been 3 bonuses and 1 split. So what you would have invested has multiplied manifold. Even after adjustments, if I look at the listing date, I mean on NSE, then end 2016, which is 52, and we are currently at 1171. Brilliant scintillating move, and but it still doesn't show any signs of stopping. The higher tops, higher bottoms, the basic of any bull market continue unabated. There aren't any particular technical signals yet to get worried about. Slight overbought is a natural thing. Negative divergence not yet. Levels breaking not yet. So I would say buying fresh. I'm not sure about that because in the last 7 to 8 weeks we've gone from 840 to 1171. But otherwise, if you have a position, hold on. There are absolutely no technical signals to suggest a trend reversal or a slowdown in momentum, Nandita.
That's the view on Varun Beverages, but a lot of queries coming in on the railway pack. Railway pack has been unstoppable. IRCTC, I think the last I saw it had hit a fresh 23-month high. Couple of queries. Praful Deshpande wants to know what to do with the Titagar, which he's bought at 400 rupees, whether it's time to sell or hold. And a lot of queries coming in on the likes of IRFC, Railtel, as well as IRCTC. What should one really do with railway stocks now?
I would say it's a hold, a strong if not a decent hold. I think the government has very clearly indicated that in 2027 there will be railway tickets on demand. They've already indicated 1 lakh crore of investments in railways. So, frankly speaking, okay, some of these orders would get time to get executed, but not as long as maybe a Muscat dock or a Cochin, where thousands of crores of orders, but a ship takes time to be built. This is not that case. It will be faster. And looking at the potential and the way the response has been to the Vande Bharat trains, I believe that there would be a hold. If you're speaking about IRCTC, it's a four-figure stock. It's just a formality of when it happens. Nandita. And even Titagar Wagons, if he wants to take some profits home, I don't think it's a bad idea. But hold on to the rest, whether it's Railtail, IRFC, IRCON, everything that you just mentioned, Nandita. I believe there is still potential, and these sectors, railway and defense, I believe would do well for the next couple of years also. I'm not saying they're going to move one way like the way they have moved now, but a lot of potential. So hold on to whatever you have. Little bit of profit booking, just little bit won't hurt anybody. But yeah, you can reduce your cost, but otherwise hold.
Right, that's the view on railway stocks. Hold on to them. But since you mentioned shipping briefly, what about the likes of GE Shipping? The stock was up and about yesterday, given the fact that there is how the militant attacks in the Red Sea. Some of the shipping stocks, that's what the street believes, could be beneficiaries of what's happening out there. So in light of that, GE Shipping already saw 6.5 kind of an up move yesterday. Do you see case for more upside?
Oh, I think this is also another stock which has been up and running since COVID times, Nandita. So 3.5 years and counting, all-time high, clear blue sky, no known resistance levels. Currently 730 to 990 in 7 weeks. I would say maybe it calls for a little bit of a breather, but the market seemed dynamic. So fresh buying without a correction doesn't make sense. I think I would be more comfortable buying this between 880 and 900 from that point of view, Nandita, because keeping in mind the quantum and the rise of the recent run.
All right. We have a query coming in on Tata Motors. This one is coming in from Rakesh. He holds some 9 lots of Tata Motors, currently making a loss of 15K. He wants to know what he should do. Any advice?
He hasn't said 9 lots are in futures or options. If he's losing 15K, I assume they are options. Futures, the loss would have been much more. Are they calls and puts? I'm still not aware. So I'm assuming they are puts and the stock has gone up and that's why he's losing money. Very clear uptrend, Nandita. So I'm not clear about what his position is. Once again, I assume he's bought puts.
He's got 790 call, average price of 2.96.
Okay. So he bought calls, but frankly speaking, I assume these are December series ones. Now we have 1.5 weeks left of this month's series, Nandita, and expecting Tata Motors to go from 729 to 790 in the next, let's say, 4 and 3, 7 trading session seems like a tall order. Looks good. Further upside, very much possibility. Great investment stock, but I don't think he's going to get, at least I feel it's going to be almost, I wouldn't say impossible, but very difficult to make money on a trade of 790, because I don't see 790 coming in this series, which is 28th December.
Right. Again, lots of queries coming in the sugar pack. Mithilesh wants to know whether it's a good time to enter Sri Renuka Sugars after the kind of reprieve that we saw, being announced in terms of ethanol production. The sugar stocks did stage a comeback. So, any thoughts here? The likes of Sri Renuka, Praj Industries, should one look at these?
Well, it's a politically sensitive sector, Nandita. So there have been announcements, and it's a very news-driven sector. So first, you've got to have a strong heart and the ability to digest overnight shocks, which keep on coming positively or negatively. Nobody would mind a positive shock though. So yes, I think from a longer-term point of view, something like a Praj Industries would make sense. Yes, seeing it come off from 650 to 561. doesn't seem like a bad idea. Setup seems promising. Once again, you need to have a little bit of patience and, like I said, a rather strong heart to face these uncertainties when they come up.
All right, that's the view then on the sugar pack. But with that, I'm afraid we are running out of time, and we've come to the end of this query segment. But Hemen, before I let you go, what are you recommending for our viewers this morning?
Okay. Market seemed to have stagnated just a wee bit, but it's sector specific. Yesterday, yesterday FMCG was up. I mean, you have sectors playing musical chairs. But yeah, Cipla looks interesting. It's given a breakout from a 14 trading session consolidation phase. So one can buy Cipla at 12.35, stop loss 12.28, target 12.49. It's an intraday buy call. Second stock, which is a buy call, is Godrej Consumer Products. It's been steadily making higher tops and higher bottoms above the 55-day exponential moving average. Oscillator buy mode. One can buy Godrej Consumer at 1050, stop loss 1043, target 1064. Once again, an intraday buy code.
All right, those were the recommendations coming in from Hemen this morning. With that, Hemen, thanks a lot for taking out time as usual and joining in and sharing your thoughts with us. Always a pleasure chatting with you.
Same here.
Well, with that, we've come to the end of this edition of Morning Trade. But of course, from me and the entire team, thanks a lot for tuning in. Stay tuned because coming up next is Opening Bell.